So friends, by now you've all heard that President Biden has a proposal on the table to increase the capital gains taxes from 20% to 39.6%, effectively nearly doubling the capital gains taxes. Now, let's go and talk about what exactly is capital gains taxes, what exactly is President Biden's plan, and what are some of the consequences that may affect you and me if the capital gains taxes were to go from 20% to 39.6%. Hey friends, it's Sam Kwok here, one of the Kwok Brothers. Welcome back. And most of you guys probably heard that President Biden now has a proposal on the table that he wants to increase the capital gains taxes from 20% to 39.6%. Now, just to be clear, this is for federal capital gains taxes, and we'll get to how the state taxes may come in play. So no beating around the bush, let's go right into it. What exactly is capital gains taxes? And there seems to be a lot of myth and a lot of misnomer as far as what exactly capital gains tax is. So I got my whiteboard for you guys to illustrate exactly what it is. So here's how capital gains taxes work. Suppose you bought, let's say, a rental property for, let's say, $100,000. And you bought this about 5 years ago. Now, recently, the housing market has been booming, and all of you guys know that. And because we've been talking about it here in our channel, let's say this same property has appreciated to, let's say, $150,000. Same property, we didn't do anything to it, the appreciation happened. Now, let's say you look at this property and say, you know what, that's a great amount of appreciation. I think it's time for me to exit out of the real estate market. So let's say you decide to sell this property and you have a profit of $50,000. Now, the original $100,000 was your acquisition price and $150,000 being your sales price. Therefore, you have a $50,000 profit. Now, what capital gains taxes does is that it taxes this amount right here. So couple of attributes when it comes to capital gains taxes, and please know that I'm not a CPA or a tax professional. I only know what capital gains taxes is because, of course, I pay it. So capital gains taxes only affect any investment or holdings or assets that you've acquired and you held on to them for more than a year. So if I bought this property, let's say $100,000, and let's say only 10 months later, I sell the property at $150,000, it would not be capital gains because it has not passed a year of me holding onto this property. So in that case, I would just simply pay an ordinary income tax, whatever bracket that I may fit in. But in this case, because I've held this for 5 years, I am now subject to capital gains taxes. So in other words, capital gains taxes only affect any capital or asset that have appreciated either through natural appreciation or forced appreciation, and it's a tax basically on investments that have grown over time. Now, capital gains not only apply to real estate, but also applies to any assets that you can invest, such as cryptocurrency, which, by the way, we'll have some videos about that pretty soon. And it also applies to stocks, mutual funds. Now, the capital gains taxes does not apply on any tax-deferred accounts, such as your 401k, certain IRAs, HSA. So capital gains only apply to any investments that you make that are outside the scope of retirement account, namely if you're doing it for your investment businesses. Now, as of today, at the time of recording, right now, you would pay 20% capital gains taxes on that $50,000 profit. But something I didn't mention is that 20% is your federal capital gains rate. Now, that also implies that there's also state level capital gains tax as well. And there is no set number for your state capital gains taxes. It all depends on which state you live in. What I found to be true is that anywhere between 3 to 18% could be the additional capital gains taxes that your state may charge you. Of course, California being the highest at 18%. So if you live in California right now, as of today, not even with Biden's new plan, you may be paying up to 48% capital gains taxes on that $50,000 profit example that we just discussed. So nearly 50%, half of your profit, if you are in that type of business, half of your profit is going straight to the government, your state and your federal government. It's almost like having your government as a silent partner, and they get to keep they get to have 50% of your profit, which, again, not the best thing in the world, but it is what it is. Now, fortunately, the IRS does have provisions and rules where you can defer much of the capital gains taxes that you may pay, such as 1031 securities exchange, or you can sell an asset or real estate through a contract, like an installment sale. So there are a couple ways where you can defer the capital gains taxes so that you can avoid paying it all up front. You can kind of pay it as an installment as time goes on. Now, keep in mind, talk to your CPA or your tax preparer because situations may change. So that is what capital gains taxes is. So if you are in any investment or maybe you're interested in investing, of course, this is something that you need to pay attention to because this might be a tax that you pay as you invest more. So with that being said, what exactly is President Biden's proposal as far as the capital gains taxes? And yes, we already talked about how he wants to increase it from 20% to 39.6%. And again, that's just the federal capital gains rate. So this is exactly what his plan is. And I'll go and write it down for you guys here in my tablet. Now, Biden wants to increase this from 20 to 39.6% capital gains. And again, this is just on federal. And if you have a state level capital gains taxes like California, they could be looking at anywhere between close to 60% capital gains taxes, which is quite a large amount as far as taxes go. Now, what Biden wants is that this increase only happens if you make more than $1 million a year. Now, we don't know for a fact whether this is gross or an AGI, or also known as adjusted gross income. Now, this is really important because if someone's making $1 million, likelihood is that they might be a business owner or they do a lot of investments or a combination thereof. Now, the reason why I say gross versus AGI matters is because gross accounts for pretty much the amount of money you make, not accounting for expenses. But AGI is income after the fact that you've written off your business expenses, you've claimed your deductions, all the things that you can write off, that's AGI. So if we're talking about someone that's making $1 million adjusted gross income, AGI, then chances are they might be making more like 8 or 10 million gross because we're accounting for expenses along the way. But if we're talking about $1 million gross as the qualification for this increase of 39.6% tax, then that could be trouble for a lot of people, and that just might wipe away a lot of the margins and profit for many, many individuals. Now, before we dive into the exactness of what Biden's plan is, be sure to subscribe to our channel and hit the like button. You guys all know the drill. If you guys are enjoying this show so far, be sure to go ahead and subscribe to it as well. So here's what his plans are. Now, in my research, there were some articles that kind of misled a lot of the readers, and it was a lot of misnomer because Biden is talking about increasing the taxes on individuals that's making $1 million, but a lot of the articles that I read in my research is talking about millionaires. Now, I have to make this distinction. Just because you make $1 million of income doesn't mean that you're a millionaire. Now, a millionaire, the proper definition is that a millionaire is someone who has $1 million worth of an asset, not necessarily making $1 million. So I can have $1 million home, but only make $100,000 a year. Doesn't make me a person that makes $1 million, but I would qualify as a millionaire as long as I own the property free and clear. So that's a little bit of a misleading type of conversation with what the media is doing. Is just because you make $1 million doesn't necessarily mean you're a millionaire. So let me just, we just need to get that out of the way. So again, this increase of capital gains taxes from 20% to 39.6% only applies to individuals that's making more than $1 million, and I believe it's adjusted gross income. Again, just guessing, we don't know 100% yet. So that would only mean that if you're making less than $1 million a year, you will not see this increase in taxes. And a lot of the articles in my research I've done shows that only 1 out of the 4 investors out there will be affected. But we really have to talk about what the consequences can be. Sure, we're increasing the taxes to fund a lot of these government programs, but what does that mean for the economy? What does that mean for the housing market? What does that all mean for jobs, ultimately? So let's go and talk about the consequences. Now, many of the articles that I've read in the research have pointed out that only 1 out of 4 investors will be affected by this new tax. But here's what the articles have failed to mention about who these 1 out of 4 investors are. And let me use my tablet to kind of illustrate that. Now, the article is saying that 1 out of 4 investors will be affected to where they're going to pay 39.6% capital gains. And the remaining 3 out of 4 are going to stay at 20% capital gains. Now, the issue with this is that the top investors, these huge investors, they captivate quite a large amount. Let me actually erase this as well. There we go. They captivate quite a bit of capital allocation, meaning that they have more money invested in the market than these 75% investors. So these 75% investors, let me make this even more clear, own only this amount as far as investment goes, and this smaller pool of investors actually have invested this much. So while the 39.6% capital gains tax increase may only affect 25% of the investors out there, the 25% of the investors pretty much have a big portion of the money invested out there in terms of the market cap and market pool. So what does that exactly mean? Well, I imagine that even though that 25% of the investors are going to be affected, because how much they've invested into the market, we're going to see a bigger impact in the economy, the jobs, and real estate as well. Now, what I imagine to be is that if there's news that this capital gains tax increase is coming and it's on the desk of President Joe Biden, I could imagine a lot of these investors are going to begin to sell off to avoid the capital gains taxes. I mean, if I had the option to sell now and pay only 20% taxes versus 39.6%, sure, I'm going to sell right now so that I can dump it so that I pay less taxes when the time comes. So I imagine a lot of sell-offs, a lot of real estate sales, a lot of new inventory in the market. We're going to see a lot of prices cool down. And this could also be true even with the cryptocurrency market, where individuals who've invested in Bitcoin, Ethereum, XRP for more than a year, and now they're looking at this and saying, hold on, if I sell any of my crypto, I would end up paying 39.6% if the proceeds are more than $1 million. So that becomes a problem as well. And worst comes to worst, a lot of these companies that rely on long-term investments may actually end up leaving the country to avoid this increased capital gains taxes. And keep in mind, the 39.6% is only dealing with federal rate. If we combine the state rate, some states like California, we're looking at close to 60% capital gains taxes. So you would imagine companies in California that rely on long-term income, long-term investments, they're looking at this and saying, wow, that's 60% of our profit margin that's gone like that. I mean, let's go and move out of the country and look to countries that have a smaller or no capital gains taxes at all. So therefore, companies leaving the country could also be taking their jobs with them, so less job creation, jobs being lost, and that can certainly have an impact in our economy, macro and micro. Now, if we're trying to do a positive spin on this, right, let's go and look at the positive side of things. If the capital gains taxes were to be applied on adjusted gross income, AGI, meaning it's $1 million net profit after all the expenses have been paid, what I also imagine is that there's going to be a lot of companies spending more money and holding onto less cash. And that logic, it comes from the fact that if companies spend more money, do more write-offs, right, do more incentives to pay less taxes, what I would imagine is that there's going to be more money circulation happening in the economy. Therefore, there's going to be more money being exchanged between hands to hands. So that's one positive that I see from this. But again, it may depend on from company to company, case-by-case situation. So those are some of the consequences that I can think of if the capital gains taxes were to increase to 39.6%. Now, that's just my thought. What are your guys' thoughts? What would happen? Will companies leave? Will we lose jobs? Or is there something positive that I'm not seeing here? Go and comment down below. I'd love to hear your thoughts as to how this capital gain tax increase may help with the economy and the Americans out there. So with all that being said, my perspective on this is that it will certainly slow down the economy. It will definitely disincentivize a lot of businesses wanting to invest in long term. And another personal thought that I have is, well, if I'm a junior investor, if I'm a brand new investor that's only doing $20,000, $30,000 a year, well, why would I want to make $1 million a year if I'm going to be taxed like crazy at 39.6% at minimum? That's not even talking about state rate. So if I'm in California and I'm making, let's say $900,000 a year and I'm an investor, well, I would do my best not to make $1 million so that I don't end up paying that 39.6% or in this case, 60% capital gains if I were to live in California. So I definitely see this tax as being discouraging to entrepreneurs, investors that invest in their community, create more jobs, and create new ideas. And I don't think this tax is the best way to move forward in the American economy. Again, that's just my perspective. You guys can disagree with me, or maybe you agree with me. So go and leave your thoughts and comments down below, and we'll keep you guys alert and updated as to whether this is actually happening or this is just a proposal and it stays that way. So we'll have to see what happens. So that being said, subscribe to our channel if you guys want the latest updates to market events, housing market, economy, whatever that's happening. Our goal is to expose the financial truth that only the top 1% know so that you also have the opportunity to grow your wealth and grow your income. So appreciate you guys tuning in. Hope this video was valuable to you guys, and share this video to your friends. We'll see you in the next video. Take care.